The holiday season is here and you know what that means. Boyfriends and husbands everywhere are scratching their heads wondering, what should I buy my better half for Christmas? Should I buy a sleek gold watch or maybe sparkling gold earrings? But as a trader, my question is a little bit different. Should we be buying gold or selling this sizzling trend? Traders worldwide are weighing up these options. Gold has hit an impressive 2,750. So what is driving this surge, and is it the time to buy or sell? Let's break it down in this video. Gold is trading at its all-time highs, having already risen by 28% this year. Historically, we've seen gold surge in value during times of a crisis, such as in the 1980s amid a recession and hyperinflation, and also in 2008 during a banking crisis, as well as in 2020 during COVID-19. But now, unlike these past crises, the global economy is relatively strong. Currently, the stock market is at record highs, unemployment is considerably low, and growth remains resilient. So what has changed? Why is gold climbing to an all-time high with no clear crisis appearing? Let's dive into a few key reasons behind the surge in gold's demand. Surprisingly, it all connects back to the Ukraine-Russia conflict, large institutions and central banks. Geopolitical tensions often send gold prices soaring, but that's not quite the story here. Following the invasion of Ukraine, many Western countries took the bold step of freezing Russian assets, sending shockwaves across several leading economies, especially China, India, and Turkey. These three countries alone represent 36% of the world's population. These countries and institutions in these regions hold billions of dollars in US assets like bonds and assets that the Federal Reserve could freeze if needed, a concerning prospect for many of these countries. So what was the alternative taken by these countries? They entered gold. It's a tangible asset that no one can freeze or control. This has prompted countless central banks and federal governments to seize the opportunity, particularly those which have complex relationships with the US. So this is one reason. Another reason for gold's rise is the declining interest rates worldwide, which are expected to continue to decline over the next 12 months, making gold a more attractive alternative again. Additionally, a US poll from 2023 revealed an interesting trend. Retail traders are now favoring gold over stocks, mutual funds, bonds, and even savings accounts. The only asset that outshines gold in popularity is real estate. So yes, it's not just central banks, retail investors are also buying physical gold every month. Even major retailers like Costco began offering small gold bars back in 2023. So what's the outlook for gold according to economists? Leading economists and major banks like Goldman Sachs and Citigroup predict that gold could soon climb to $3,000. That said, traders should remember that while gold could hit $3,000, volatility is still very much in play. Historical prices have often retreated after peaking, so staying informed and prepared is key. So let's recap why gold is increasing in value. The first reason is that many countries are increasing their exposure to gold in order to de-dollarize and to hold an asset which is tangible and cannot be frozen or controlled. The second reason is interest rates, which are declining across the globe. According to economists, they are likely to continue to decline over the next 12 months. The third reason is investors' growing preference in gold over other instruments such as stocks, savings, and other assets. With leading institutions predicting that gold could reach $3,000, we'd love to hear your thoughts. Are you convinced?